Hello and welcome back. My name is Brian and this is my channel, The Frugal Spender, where money is made simple. This channel is all about making the mysterious world of finance more simple, showing that regardless of your financial position, learning about personal finance and money can improve your situation. Today I'm going to look at whether you should overpay your mortgage or not. Before we get started, I just want to clarify that this information is purely for information only. I am not a financial advisor and none of this is advice specific to you. I am only sharing this information as I've learned it myself, and if you are looking for personal advice, I would advise going to seek a financial professional. So let's get started. The topic of overpaying your mortgage or not to pay off your mortgage has put a massive divide into the online financial community and money bloggers. There are pros and cons to both sides. In my opinion, the side you do take will come down to your current financial position, your mindset, and also your risk tolerance. In this video, I'm going to go through some pros and cons to overpaying your mortgage and some examples of how it looks and how it would play out should you do so. Even if you don't currently have a mortgage but are looking to have a mortgage in the future, this video should give you some insights and maybe some tips about what to do when you do have a mortgage. So, what is a mortgage? Well, a mortgage is a loan to buy property or land, normally given to you by a bank or a building society. Now, you will have to put down a deposit of some description, ranging from 5% all the way up to whatever percent you can afford. And the bank or building society will give you the rest. Obviously, coming up with this money is the main obstacle for especially first-time buyers. So the loan is generally offered at a fixed interest rate, which is a set interest rate for a period of time, or a variable interest rate, which is dictated by multiple factors, including the Bank of England base rate. A mortgage is a secured loan, which means it is secured against the property that you buy. If you don't keep up with the minimum payments, it can be repossessed. Now that includes even if you make overpayments for a considerable amount of time and you have a lot of equity in the property and your financial position changes, the bank could take the home away from you if you can't keep up with the minimum payments. So what is a mortgage overpayment? Well, simply, it means that you are paying more money than the amount set by the lender. This could be considered a minimum payment that you have to pay in order to continue with that mortgage. Now, you can make an overpayment on top of that minimum payment in two ways. You can either make a regular overpayment monthly via direct debit, or you can make a one-off lump sum overpayment. So let's look at some of the pros for making overpayments to your mortgage. You will be mortgage free quicker. Now, on face value, this seems really obvious. However, have you ever considered actually what it would feel like to not have a mortgage payment, to be completely debt free? Think about what you could do with that money. Now, that means you can go on more holidays. That means that you can invest more. Basically, you can do whatever you want because that house is yours. You own it. Nobody can take it away from you. And you'll have all that money that you used to pay towards a mortgage, and you can do whatever you want with it. So let's look at an example of shortening your term. If you had a mortgage of £150,000 over a 25-year period at a rate of 2.25% and made just £50 a month overpayment regularly, you would shave off 2 years and 4 months off of your mortgage term, and you would have a saving of £4,608 over that term. Now, in that same example, if you put £100 a month as opposed to 50, you would shorten the term by 4 years and 3 months and have a total saving on interest alone of £8,370. Of course, if you put much more than that, the numbers look much better and your term reduces significantly. Now, I've put a link in the description below for the calculator from Money Saving Expert, which is brilliant. I use it regularly. Make sure you have a look at it. put your details in, because it's going to be different for everybody, and play around with the numbers and see how it comes out for you and amounts that you can afford. So another pro to overpaying your mortgage, and you saw in the previous example that you pay less interest. The great thing about making overpayments is the money that you overpay goes straight to the capital. None of it goes towards the interest, which means that the more you overpay, the quicker the money that you owe to the bank or the building society goes down much quicker. And you can actually save quite a large sum of money over the term of your mortgage. So let's look at some of the cons now of making overpayments on your mortgage. Well, the first one, which is the one that is argued most often, is that you can make better returns elsewhere. Potentially you could make better returns by investing your money in the stock market or in property or a high interest savings account. The reality is, with high interest savings account, most banks are paying so little interest at the moment that you're probably saving more by overpaying your mortgage. Certainly at the time of recording this, of January 2021, interest rates are very, very low. And if you wanted to try and make better returns in a high interest savings account, let's say you have a mortgage with a 2.99% interest rate, you would have to be getting at least 3%. So it'd have to be above 2.99% to get a better return for your money in a high interest savings account, which at the moment isn't likely. However, it is true that you could probably make better returns either in property or on the stock market. Now, it all boils down to you as a person. Everybody is different. Would you prefer to be completely debt-free, owe zero money to anybody, or are you happy to have a mortgage for the rest of your life, or maybe even afterwards? A lot of people think that a mortgage is a good debt, meaning you've borrowed money for an appreciating asset over time. The value of a house goes up, and the mortgage that you've taken out, that loan, stays the same and actually goes down. So you are making money as a result of it, hence good debt. Another potential con to overpaying your mortgage is penalties. Now, most people can overpay their mortgage by about 10% per month. Now, if you have a mortgage for £100,000, let's say, you can generally overpay your mortgage by £10,000 per month. So 10% of the total money owed. Now, that works out to be quite a lot a month. So you would have to overpay quite a lot per month to hit that target. But the reality is, every single lender has different rules, so you need to check with your lender what their stance is on overpayments. Now, some may even be less than 10%, and some may be no limit whatsoever to how much you can overpay. You need to check with your mortgage provider. Typically, the penalties range between 1% and 5%, which seems quite low. However, if you make regular overpayments or a lump sum payment, that will add up very quickly and will eat away at the money that should be going towards eating away at the capital, but instead is going to the bank for penalties. It's important to note here that when you do make overpayments to your mortgage, the balance will go down quicker, which means that over time, 10% is going to reduce. At the end of the day, you need to remember that a mortgage is there for the lenders to make money. They're not lending you money to make you money. They're doing it so that they can make a profit. Over the years, the lifespan of that mortgage, they're going to make money via interest. My family, and myself in particular, I want to be debt-free, totally debt-free, including the mortgage, within 10 years. So I am making regular overpayments on our mortgage. At the moment, I'm doing 15% of what my minimum payment is. So I have a lot of scope to go up or to go down should I need to. I've just recently upped that from 10% because we've both recently got a pay rise, which means that as our income increases, we can increase how much money we overpay by. And that's actually quite a good way not to fall victim to lifestyle inflation. The more money you earn, your lifestyle just suddenly fits to that salary or that new income. By increasing your mortgage overpayments incrementally, you're not going to notice it, but actually you're significantly shortening the length of your mortgage. I also regularly check the Money Saving Expert mortgage overpayment calculator. It helps me stay really motivated because by putting in, the next step, the next increment that I think I'm going to put towards the mortgage, you can see the number of years that I'm going to have a mortgage really decrease. And it actually gives you real hope for the future. The most convincing argument against overpaying your mortgage is certainly to invest that money in the stock market because you can get better returns. And I fully understand that. I don't just overpay my mortgage, I also invest money regularly every single month too. Why can't you do both? You don't just have to do one thing. You don't just have to overpay your mortgage, and you don't just have to invest. You can do both. And for me, when my mortgage is completely paid off, I will redirect money to investments and to enjoy life even more. If you like the sound of paying off your mortgage early and being completely debt free, but you do have other debts, consumer debt, any other debt elsewhere, I would completely advise that you get rid of that debt first. Now, there's a couple of methods you can do that, the snowball method or the avalanche method. Now, I will go into depth with both of those methods in a future video, but what I would suggest is that you get fully out of debt before you make any overpayments on your mortgage. I would also recommend having an emergency fund. Now, I would say to have 3 to 6 months expenses sitting in a bank account, not making any interest whatsoever. It's not there to make interest. It is an insurance policy. Now, the benefit of this, whilst making overpayments on your mortgage, is if you do find yourself in a dire financial situation at any point from something that's out of your control, these overpayments that you've been making on the mortgage aren't at risk. You have money set aside that you can continue to pay your mortgage should something go wrong. I will be making a lot of content in the near future on this channel, all about budgeting, personal finances, all the things I've just been talking about, emergency funds, how to get out of debt. So please, if you subscribe, you will get a notification anytime I release a new video. And I hope you enjoyed this video. If you have any comments or questions, if you put them in the comment section below, and I will reply to all of you.